Thank you. So income calculations, as I was telling you that income calculation is not a challenging part that could be done by anyone. Simple math, whoever knows. The idea behind the income, what to calculate, why to calculate, that is the more important thing that we need to understand. Okay. So tell me what are the different type of income.
Sir, salaried persons,
Okay.
Rental income,
commission,
Okay.
royalties,
Seasonal income.
Okay. What else?
Retirement income.
Retirement income, yes.
self-employment income,
Self-employment income, okay.
401k.
Okay. So what is the difference between employment and income?
The income means money is coming to your account, either it's from your job, business, or anywhere else. But
Okay.
employment means you are engaged in somewhere till you are working.
Okay. Anyone else?
Sir, employment is one source of income. There can be multiple sources.
Okay, very good. So employment is the source. Source for what?
Income.
Earnings, right? Whatever we earn. Always remember, employment is a source and income is earning. From where this income is coming is always required. So income is always on the second part. First part is employment. Why I'm telling that? If somebody is, bringing some money from Hawala or from, wrong means, would you be able to consider that income?
no sir.
No, sir.
Oh, right. That could
So
not
what
be exactly the source of income should be? Remember, any income that is coming only and only from the legal source, right? From the legal source could be considered as income. But employment is more important to always check what is the source. Is that source legal? How long that source was available, or how long that source is going to remain there, right? So in the past chapter, in the credit chapter, what we discussed that whenever there is a history, always we should go for the last 24 months. Remember?
Yes sir.
Whenever the history need to be checked, that should be checked for last 24 months. 24 month of, payment history, 24 month of residential history. I mean, whatever, when it comes to history, this is the mandatory period. We always check for 24 months, unless investor guidelines are telling that, okay, 1 year history is required. Otherwise, generic 24 months, we always required history. When it comes to continuancy, right? Continuancy is going to be how many months? 36 months. It is very important to remember both the scenarios. When we see in the future how long this legal income or how long this income is going to continue, that should be for 36 months, 3 months. 3 years. Whereas whenever we check history, it is always going to be 2 years.
2 years.
And 3 years. You can write 36 months or 3 years. That is going to be the continuity. So whenever someone asks you, okay, what should be the continuancy for this particular income? Simply you remember, continuancy means going to be future, and future always need to be checked for next 3 years. Whenever somebody is asking you about history, remember the history is always need to be checked for 2 years. So somebody asks you how long history you required for residential, then you gonna ask, tell them what is the history, 2 years, right? If I'm asking you that, okay, employment history need to be checked, how long you are working, so what is the history?
3 years.
Before. Yes.
History.
2 years.
History is always 2 years. So we always need employment history of borrower for 2 years because it is history, previous past 2 years. But if I ask you, okay, this borrower is receiving child support income. Is the child support income is going to be the rest of the life? No, right?
No.
It will mostly be given to next till the child attain 18 years of age. Simple, right? But is there is a possibility borrower is receiving a child support and that child support income is going to be, I mean, awarded for 18 years. I mean, till the child attain 18 years of age. Now borrower telling I'm getting $1,000 as child support. What we are supposed to do? We need to check child support income is not a permanent income, right? It will be only till 18. So if we come across through the child support document or from the divorce decree that child date of birth is 2002, it's 2022. Do you think in the current date this child support will continue?
No.
Because as soon as we add 18, it will become 2020. That means it's going to end in 2020. Or even if we are going to make it 2004 or let's say 2006, to be more clear, let's make it 2006.
16 years.
15 years, 15 plus, right?
16 years.
16 years, let's say 16 years. So this child is gonna receive this income till 18 years, right? So how long this income will be coming?
Next 2 years.
3 more years. 2 more years.
2 years. So can we consider this income?
No.
Because we need 36 month of continuance equal to or greater than 36 month. Clear? What is
Yes, sir.
continuance? So always remember, whenever it comes to continuance, we always need to see that it should be at least for 36 months or 3 years. But when we ask, employment history need to be checked. Every borrower is supposed to give us 2 years of residential history, 2 years of employment history. There is no exception. 2 years of employment history means in the last 2 years where the borrower was employed. He could be in 1 employment, he could be in 3 employment. Is that possible? Yes. He was working in 2022 at maybe at Wells Fargo. Then in 2021, he changed his job for Chase Bank. And in 2021, he worked there for 3 months and again changed and went to WNS. And even in 2021, he didn't like it. So he went to maybe to BOA. That is possible. But we need the entire history for the last 2 years. If borrower is applying loan in the month of January or in the 2022, previous 2 years history required. That is a generic. Now, in some cases, you will see DULP, they are going to ask you only to ask for 1 year history. That is fine. Those are special, loan-based scenario or AUS scenario. But generally, we need 2 years of history for everything. Is that clear?
Yes, sir.
Very nice. Now, whenever there are expenses whatever the expense, it could be in the credit report related to mortgage, related to credit card, related to tax, related to insurance. Those are expenses, right? Remember? So if we have two expenses in two document for same in expenses, like if expense appearing is $260 and appearing is $290 for the same product. So we need to decide which one need to be taken. So which should be considered in the DTI as an expense for the same product.
290.
290.
Okay, so that means in expenses, while we are going to consider the expenses, we should always go for the higher one, right?
Yeah.
Now in the income or in the earning, when we will have 4 or 5 values, like in per one, there are different formulas. So if according to one formula, according to one frequency, borrowed income is $1,000. Another frequency, borrower income is $900. We did one more calculation and borrower's income is $1,100. So which you are going to consider now?
900.
Why?
Always the lower side.
Income lower side, sir.
Right? So it should always be the least one. And it should be the max one. That is the approach. When it comes to expenses, it should be the max one. It should be the least one. Least. Now I'm telling you why. Let's take a scenario. This is our DTI calculation. Remember, all expenses divided by total income or all income, right? Or we can say not all is the incorrect word. Let's put it total expenses versus total income, correct? This is here we, whenever whatever coming out of the calculation, if it is an expense, it will go to top side of the calculation, and if it is income, it will go to the always to the, we are going to add income here. Is that clear? And then multiply by 100. That is the our formula, right? So all the expenses will go to the top and below. Is that fine? I mean, clear? Now let me give you a scenario. Borrow total expenses are, let's see, 850. Now what is the calculation?
44.73.
44.73%, which is very nice. Now see what we did. We considered the maximum $850 as our expense and not the 660. Now after us, somebody taking our loan for QC, not at our office, but loan get passed, go to the secondary market, and in the secondary market somebody is going to purchase the loan. Before purchasing, they wanted to check the, they wanted to re-underwrite whether loan is good to be underwritten or not. Then what they will be doing, they will be checking the income, right? And let's say in this scenario where our DTI with the maximum expense and minimum income is this 44.73. Our maximum threshold or limit is 45%. Right? Now someone in the secondary market, they before purchasing our loan, they are doing the calculation and they are telling 1900 is not correct income. Borrower should get some benefit and they are going to include this $2100. So instead of 1900, they are using income as $2100. They are telling no, this is incorrect. This does not make sense. Because of some issue, this $2100 should be considered. Okay, they consider $2100 expenses. They agree with $850. What will happen? What is the now calculation or DTI?
40.47.
40.47. Now what is whether they will consider our loan or not. It is still going to remain, because what is the maximum? 45. So even if they take the other value, loan will still be qualified, right? They can purchase the loan.
Yes.
But in the other case, if we are going for the lesser value, if we are going for the lesser value and instead of this 850, we are taking 660. Plus instead of 1900, we are taking 3100 or 2100. Both are the value here. According to us, what is the DTI ratio?
31.42.
31.42. Now it goes to secondary market. In the secondary market, they are re-underwriting our loan. Let's see what happens. Now they go for maximum 850. That now it should be 850 actually, right? And income should be $1,900, or maybe it's 950. Let's say we didn't consider it was $950, right? So they consider the maximum expenses 950, right? So what is the
So 50%.
50% DTI? Is it our loan is qualifying or not?
No.
No, right? So that is why we should always minimum income, maximum expense. If our borrower qualify with that approach, we know that now even if somebody comes back and they are trying to change our value, it will always be higher. And if they are going to change our expenses, it will always be lower. Our loan will still be in the good shape. But if we are taking the vice versa, we are taking the less expenses and more income, it might get failed in the secondary market. Make sense?
Yes.
Right? So that is why it is not that we should forcefully take the less income, but whatever the best, if we need to calculate income from with the 3 or 4 different approach. All the approach, whatever the minimum and most appropriate, we will be taking that. Is that clear? Yes or no?
Yes, sir.
Very good. Okay. Now